All right, everybody, it is 1 o'clock, and we'll get started on the first webinar for Qvinci in 2016, Qvinci 101. My name is Richard Madison. I'm an account executive with Qvinci. The reason why we are calling this Qvinci 101 is quite frankly, we had a busy year last year, really adding some game-changing features to our solution. And what we wanted to do was start off this year by doing a little bit of a refresh on what Qvinci can do. Because our site has a whole new look and some new features that are integral in our solution, we thought it would be a good idea for both the customers that really are familiar with us to get a look at the new site and what it looks like and how it feels, but for people that aren't familiar with us for us to put our best foot forward in our solution. So what we're going to do here is we will take a look at our agenda, and let's see. Oh, there we go. First, we're going to talk about Qvinci, who we are and what we do. We're going to do a bit of a session on what is financial reporting software and the types of issues it solves for franchises and for accountants. We'll take a look at how it solves those issues and what kind of results you can expect. We'll look at some next steps and then have some time for Q&A. Now, if there are any questions during the presentation, by all means, please go ahead and type them into the chat window. My colleague Caitlin Underwood is manning that chat window, and we'll answer those as we go. But there will be time at the end for question and answer also. As we go through this webinar, we will have some poll questions that we put up and present for you. I would ask that you go ahead and you answer those. They're very brief, one question each, and I think there's a total of maybe 3 or 4 of them. But what that does for us is it gives us an idea of who our audience is and helps us to tailor these webinars to the right folks going forward. So that being said, the first poll question should come up right about now for you. And what we'll do is we'll have you answer those, and then we'll get started with our webinar. So first, we'll talk about Qvinci. Qvinci has been creating award-winning software out of Austin, Texas, since 2007. We became the recommended reporting solution for the Intuit franchise program in 2011, and this is significant for a couple of reasons. First, it shows that the power of our solution. We invented and patented a technology that quite frankly other companies had spent years and millions of dollars trying to create, and we did it successfully. And by pairing with the Intuit franchise program, what that did was it put Qvinci's solution partnered side by side with the #1 name in accounting. And by doing this, this also shows that we're not done here. What we will, with additional patents that we have pending, what we'll continue to do is be an industry leader and an innovator, providing cutting-edge technological solutions to an increasingly complex financial reporting issues that businesses will face. The landscape as far as any business goes has changed. There's additional government regulations. There's internal and external reporting that needs to be done, and we will continue to use technology to attack those issues and give customers a way to automate those issues and take the tedious work out of their lap and leave them the work that will help them grow their business. This next slide shows a handful of our customers that trust Qvinci. As you can see, it covers really the entire range of customers that are available. We've got fitness places, we've got cleaning and restoration and junk haulers, we've got quick serve restaurants, we've got accountants and bookkeepers, even nonprofits. And that's important to note because even though we're going to be speaking specifically about some franchise issues and some accountant issues, Qvinci is agnostic. We can work with just about any business and be able to give them that consolidated reporting solution that they're looking for. So what is financial reporting software? Financial reporting software is software that automates the collection, the consolidation, and the reporting of financial statements. Now, what that does is basically it takes away the time and the resources that are needed for a manual process. And typically what you would see prior to financial reporting software solutions was when business owners had to consolidate financial statements from multiple locations, the process took so long to actually gather the information, put it together in a format where they could actually consolidate it and maybe even do some reporting and analysis on it. They were pulling information from different locations, possibly even different accounting systems. And what that created was two things. It made the business owners look at at creating that reporting as something that they would only do if they had to do it. It was a necessary evil and usually was only done at the end of the year at tax time. But it also creates a time lag in the information that you have. And the reason why the financial statements are so important is that the numbers that you see on things like a balance sheet or a P&L or even a statement of cash flow, those numbers are basically the keys to analysis. They're the keys that you would use as a business owner for budgeting, for planning what you're going to do in the next year. And if that data is in arrears or even out of date by as little as 3 months, you may be making business decisions based on a market or a landscape that doesn't exist anymore. So really the reason why financial reporting software is out there is it takes that time-consuming, tedious, and resource-intensive manual process and automates it for you. And what that does is that puts that time back in your pocket so that you can now analyze that data, get the actionable information that you need, and move forward in growing your business. Now, one of the other things that financial reporting software does is it basically will fill gaps in your accounting system. When you get financial statements like a P&L or a balance sheet, they give you those numbers, and the numbers are important. They are the basis for how you're going to plan and grow. But what they don't give you is the context in which those numbers were created. And by that I mean they don't tell you if, for example, maybe one region did better than another region due to some economic factor that was only prevalent in that region. Perhaps on the West Coast you had a group of locations or a group of stores that didn't fare as well because of something like an earthquake. And although the P&L is important, and it is important to see side by side on those numbers, it doesn't give you the context in which those numbers were received. And that's where that reporting software can come in and give you that extra bit of information. The reality is that you need not just financial statements, but also the analytics from the reporting software in order to succeed. Now, what you can also look at as far as the financial statements is that in the current environment, the way that the internet has changed how businesses operate, just the financial statements by themselves, they tell you what happened yesterday, but there's really no how-to as far as what's it going to do for you tomorrow. That's where the analytics and the tools in Qvinci can give you that extra bit of information that you need to turn a business from maybe just breaking even into something that is profitable and growing. So what we're going to do now is we'll take a look at Qvinci and as a reporting software, what problems does it solve for franchises? And what this does is you take a look at a franchise business, and what you have is you've got locations everywhere, and you need to gather the financial statements from those separate locations. In a lot of cases, they may even have separate accounting systems, and so what you're presented with is spending a lot of time in the area of gathering information, spending a lot of time in trying to make sense of that information, and then use it as a means of moving your business forward. And with a lot of franchises, those particular owners are working on running their business. They may not even do the books themselves, have that outsourced to a bookkeeper. And so you get, again, data that is in arrears, if it exists at all, and there's a difficulty in consolidating from these disparate accounting systems. And that leads to things like inaccuracies in the data. It can also lead to missing points in the data and opening the door for things like fraud. The bottom line is that if franchises are not using a reporting solution that does the types of things that Qvinci does, then they're making decisions that are essentially on the fly with no meaningful financial or operational information in which to base those decisions on. And what this can lead to is inconsistency in performance. It can lead to inaccurate information and inaccurate reporting, whether it's internal to your executive leadership or external if you have a government compliance. Now, the truth is that when you have accurate and timely information, that equates to higher revenue and increased profitability. And more profits leads to expansion, higher royalties. There is, you can have an attractiveness of the franchisor to additional franchisees. Accurate reporting can also lead to strategic advantages over the competition. Now, at this point, we'd like to throw in our second poll, just a quick question on type of business that you're in, and from there we'll move forward. All right, so now we're going to look at the types of issues or problems that Qvinci can solve for accountants. Accountants are in a kind of a changing position these days. The trend for accountants has been to get away from the reactive accountant, the person that fills out those financial statements and presents them to you once a month. That particular type of accountant is a thing of the past. The trend in the accounting industry has been towards automation, and this is because the demands upon an accountant by the clients have increased, and the increasing level of those demands has one issue with it, and that's that the time that it takes to fulfill those demands from their clients generally it increases also. And so what you get is you have essentially clients asking their accountants to not just present them with the financial reporting, but to offer them consultative service based on that reporting. So they're asking the accountants to collect the financials for them and to go ahead and interpret them and give them those analytics and business advice based on those numbers. You know, they may be looking for something as simple as cash flow strong, cash flow positive enough to expand. It could be something like that. The trick is that the same labor-intensive manual reporting practices that a franchisor would have, an accountant would have if they had clients in different locations as well. And for accountants to be successful, they have to become the trusted advisor for their clients. The clients will give them every opportunity to be that trusted advisor if they're already there, but if they're only delivering on those same reactive type of services, I think what will happen is that client engagement will decrease to the point of them finding another accountant. On top of the lack of client engagement, with the labor-intensive reporting practices, you also get a time lag on the reporting. And what that does is when you create a time lag by forcing accountants to work the nuts and bolts of the accounting instead of evaluating the data and finding new opportunities for clients, you get data again that is basically out of sync with what the current environment is. And what that does is that clients can't stay engaged because there's no value in out-of-date information. Now, the way that you solve this problem or this list of problems is by utilizing an automated reporting platform. It really solves all of the issues by eliminating the time-consuming piece, and it gives accountants the ability to create new and billable services that really create stickiness with their clients. For example, an accountant could brand Qvinci as part of the solution and services that they're offering to a client. And instead of emailing back and forth reports and parts of reports and reading over them, instead of doing that, what they could do is they could give that client a login to Qvinci where the two of them on a conference call could review the data, look at all of the tools in our solution, and basically optimize that data in groups so that it has more meaning for that client. So when you take out the labor-intensive reporting practices, the time factor of it, and you add that stickiness with the client, what that does for the accountant now is now they've got the time to maybe go after bigger clients, to expand their billable services, include custom reporting and analysis as a service for their clients, or something that maybe the bigger clients would require. So this gives the accountant a means to grow their business as well. So with these types of problems, how does Qvinci attack this and be a relevant reporting solution? Qvinci automates a process that was largely manual. That is the collection, consolidation, and reporting of financials. And what this does is this gives any business an easy, affordable, and automated way to bring data from multiple locations into an easily viewed and easily digestible format, and immediately give them the ability to understand the financial picture for each unit within that environment, any groups, or the entire ecosystem. And this remains true even if the accounting systems for each unit are different, if the charts of accounts are different from location to location, and we'll go over that part of it and what we do as part of that consolidation piece, and where, frankly, our patent sits in the mapping to a standardized chart of accounts. Unlimited logins will allow stakeholders to view up-to-date financials, and it allows basically all parties to align to common goals. It creates consistency and transparency within that ecosystem to the financials, and the business intelligence tools that Qvinci gives you will allow you to compare locations side by side, rank them, benchmark them, even filter to operational subsets so that you can optimize the analysis and share the best practices. So what kind of results can you expect with Qvinci? Number one, you can expect 24/7 access to your financials. And what that means is you have access to the financial health of the business or a subset of the business anytime, anywhere, on any device where you have an internet connection. And timely, accurate data means deeper insights into performance. The ability to filter by non-financial factors will give you deeper insights to like entities. Benchmarking will allow for best practice implementation industry-wide, giving you the opportunity to improve performance for the overall environment. Some of the other tools that we have is email alerts, and a health check can help you spot operational or financial problems as they happen and fix them at the time that they happen. So what does that do for you? Well, failing franchises can be saved by getting issues addressed before they can really do any damage. Because the information in Qvinci is up to date, the last data entry in QuickBooks, you can track the profitability of your business and its appreciation in value, which is important for a lot of businesses now, is to be able to see the profitability as they grow and the appreciation in value of their business as they grow. Now, at this point, what I'm going to do is we've looked at the whys on Qvinci and what problems they address. What I'm going to do is I'm going to bring in the application and do a quick overview for you and let you see the tools and basically the how it's user-friendly it is, the true elegance to the Qvinci solution is really the simplicity of it. So here is the Qvinci dashboard, and what this represents is basically this is if you were to take your business's temperature, this is what you would get. What this represents is a graphical interpretation or dashboard type interpretation that shows the financial performance of all of these reporting entities. Now we have them listed here as cities, but these this could be a single QuickBooks file with a bunch of classes, or each one of these could be its own file. And because Qvinci will work with QuickBooks Desktop, Online, Enterprise, really all the flavors, it doesn't matter which one you're choosing to use. We can pull it into your Qvinci application. We can consolidate the data for you, and we can get you reporting. And the way that we do that is by dynamically mapping these locations to a standardized chart of accounts. And what that looks like is basically this. We have some templates out there that are based on particular industries. You can actually go in and use those templates and load a chart of accounts. And what we will do is as we find differences in different locations, we will take keywords that are like things like lease and rent and put them in the correct spot. And we have a roughly a 70 to 80% success rate in mapping those like terms. And the other roughly 20% are outliers, and we'll show you how to fix those. But in here, with these locations reporting, as you can see, you can deselect these and look at an individual location. So now we're showing just this, the Austin store as it's titled. You could also go in and pick from the quick filters. And what these are non-financial based filters that you can pick up to 20 that you can set to group the data in ways that give you the information that you're looking for. The reason why this is important is this is the context that I was talking about. So you wouldn't want to compare stores maybe that were in different demographic areas, or the population density was vastly different. You wouldn't want to compare a store that had only been open 6 months to one that had been open 10 years. And what these quick filters do is give you the ability to put like with like. Now the widgets over here on the dashboard, basically these allow you to add or move things off as you want to see them, or put them in the order that you want to see them, simply by clicking on them and moving them over or moving them up. And when you hit save, it resets. So again, a very high level, like I said, just the temperature of your business. It's by no means is the entire health history, but it does give you a good place to start when you're looking at financial reporting. Now we're going to get into kind of the meat and potatoes of Qvinci, and this part of it is in our reporting. And this is where we go from data and numbers to the actual business intelligence that's actionable. As you can see here, we've got a list of 12 reports, generally accepted accounting principle type reports, P&L, balance sheet, cash flow. We have P&L weekly. We have trial balance. Trial balance is actually a new feature for Qvinci. One that is very important and gives our solution a lot of power is in the peer benchmarking. And what this does is, with anybody who's got over 10 basically reporting entities, 10 to 15, you can anonymously benchmark each location to the top 10%, the top 20%, or the average in your environment. Now, the reason why this is important is in your environment, you may have particular promotions you're running. You may have actually built the better mousetrap and be the only one to market with that particular product. And so by benchmarking yourself against your environment as opposed to an industry where you're purchasing that data, and again, data that's in arrears, you may have a little bit more weight as to best practices and what makes your particular business successful. Now, if we take a look at this, if we were to look at a P&L, and we'll just compare it to the top 10%, and what we're going to do is we'll look at it in this date range, just this calendar year to date. We build the report, and this is how fast you can get that from Qvinci. So here you have each location. Here is what the average of the top 10% is, and what you can do is you can actually look at these now and see top 10% is averaging 661,000 in engine sales, and Austin is 96. There, we may have to do something there. Another way of looking at this is by using vertical analysis. And I think when you're comparing side by side like that is, it actually has more weight by looking at the percentages as opposed to the actual numbers. So what we'll do is we will turn the vertical analysis on. We'll only look at percentages. So here you have the top 10%, and then in each category, how that particular location is doing. Again, you can filter these using your quick filters. You can also filter them basically by hand. If you wanted to put maybe just the Texas stores on there, you could simply by clicking them. So what this does is this gives you the ability to drill down into your data and get real information that's actionable. If you were able to put these Texas stores side by side, they're all in the same state, probably have relatively the same demographics and the same external factors that influence how they're operating. So as you look at these, you can say, well, this particular location is doing much better on one set of sales or much better on one set of expenses. Let's share best practices from him down there. It may be that all of them are down due to an external economic factor. Maybe it's a drought. And now you want to say, okay, well, we need to look at this top 10% and how we can apply these business practices to this region. Again, what that gives you is essentially a line of sight to increase profitability to stores that may be in a state of stress or distress, maybe even failing. And by being able to save those failing franchises, and even after saving them, move them up the performance ladder, you make yourself a lot more profitable. not only to other potential franchisees, but also to people who may want to buy that business. Now, the reason why we are able to give you this type of view and consolidate it and actually rank them and benchmark them and give you that type of granularity in the data is because when Qvinci gets all of those disparate standard or disparate charts of accounts, what we do is we will standardize them for you. And what you see when you look at the chart of accounts, what we'll do is we're going to pull up another P&L. So what you have here is we're going to look at, we'll say by location, this calendar year to date, and we have the account mapping on. So what that means is that all of the reporting entities are conforming to that standardized chart of accounts. We'll build that report. So now we have these basically 4 locations. They're all conforming here to this chart of accounts, and everything is nice. You have them, the totals here, and you're set, ready to go. Now, what you would see if there was something, say for example, the Austin store started selling a product that the other locations didn't have, and that necessitated another line in the income. Well, because that wasn't in the standardized chart of accounts, what you would see here is something that said unmapped. And when it says unmapped, it's basically an alert. There's something going on in my reporting here. I need to pay attention to it. And the way that you would pay attention to it is you would go to Tools, and you say Map to my standard chart of accounts. What that does is that will bring up all of the errors to that standardized chart of accounts, and it's as simple as clicking on one of them or all of them, picking where they go, and then hit Map Selection. And going forward, what will happen is that these outliers, as far as the items in the chart of accounts, will now automatically map to where you want them to be mapped. If you wanted to go a step further, you could actually go to the standardized chart of accounts, and you can add child relationships, edit or delete them. You could create another parent and then add child or edit the child relationships there. And what this does is this allows you to update the standard chart of accounts that you have in Qvinci, just like you would on paper if you were doing this in QuickBooks. Now, one of the questions that we are often asked is, when you update that standard chart of accounts, does it go back and change your QuickBooks account? No, it does not. It only changes in the chart of accounts in Qvinci. It doesn't go back and change in the accounting system. Now, something else to note is that when you're looking at a P&L or a balance sheet, you can actually turn that account mapping off and then look at everything in the native chart of accounts as well. So when you're talking to franchisees or potential franchisees or additional locations and you want to get reporting on it, they may not want to take the time to learn what goes where in that standardized chart of accounts, and they don't have to. You can turn the account mapping off for them, they can turn it off for themselves, and they can see everything in the native format that they're used to. So eliminate the confusion that a standardized chart of accounts may create with a single entity or over several. Now, some of the other tools that we have, as you can see here, there are alerts. There is the health check, and what these give you are another set of things that basically they need my attention. What I'm going to look at first is the health check feature. What this tells you is there are basically what Qvinci does is we perform a check after every time that your data syncs in QuickBooks, and once it gets sent and syncs up with Qvinci, what we do is we run tests on that data to make sure that it's accurate. The first time that you link and sync with Qvinci, we will actually go back 3 years and report on all of that data in 3 years, and we'll be able to see mistakes, omissions in the bookkeeping or in the accounting going back 3 years. So from a standpoint of a business owner or somebody who needs the accuracy of the data to be as clean as possible, you can go into your health check, and this is your sanity check, and this is telling you that across those locations, on your balance sheet, there are 36 issues where assets and liability are not equal. And to fix these, it's as simple as click on here for your details, right? What this tells you is now you've got basically the location where the issue occurred, month and year that it happened in, and what the issue was. So now instead of trying to find a needle in a haystack decimal point error when you're doing year-end consolidations, we give you the date and the location where it happened and what that error is, and eliminate the searching part of it, basically allow you to fix that problem. And in going back 3 years for the data when you first used Qvinci, the nice thing is now you can spot patterns in the accounting. And if you find, say, that a keeper that you outsourced accounting to is making the same mistake at the same location over the course of a year or 2 years, or making the same mistake but across several locations over the course of a matter of time, it may be an honest mistake. It may be that somebody is cooking books. But either way, what this does is this closes down at least partially fraud. What we found at Qvinci is that when you eliminate the opportunity for fraudulent activity, in most cases you'll eliminate the fraud. And the nice part with that is that this gives you another layer of transparency for your business. And what a lot of businesses need now, with additional government regulations on reporting, with getting consumer confidence back, or if there's something like a nonprofit, with having transparency for the donorship to show that they are good custodians of their donors' money, is they need a feature like this that allows them to fix issues as they happen, as opposed to later on when the damage is done. Now, at a high level, these are just some of the features for Qvinci. What I would encourage anyone to do is if you have a need to look at a deeper dive into the solution, something where you want to really get a personalized demo for Qvinci, what you can do is you can actually contact us. This is the sales team for Qvinci. And what we have here is email addresses to reach out, and then the actual business industries that we are well versed in or experts in. As you can see, for example, Roman is well versed with the medical and dental and food and restaurant. Caitlin, health and beauty, real estate. Myself, cleaning, restoration, children, and education. And Marty, everything from retail and moving and storage to religious nonprofits. So now I'm going to go ahead and turn it over for Q&A. Oh, I forgot one thing. We will actually be at IFA this year. Big production. It is in San Antonio. Because we're based in Austin, this is in our backyard, and we are going to do it up big. So if you have any plans, if you don't have plans, come to IFA anyway. IFA is the largest annual convention for franchisees, franchisors, suppliers that support the franchise industry. The Qvinci inventor, Charles Nagel, will actually be hosting a roundtable discussion about building and strengthening franchisee relationships. This will occur on Tuesday, February 23rd from 8:30 a.m. to 10:15 a.m. And if you are down for IFA, make sure you come by our booth. There will be surprises there. I'm not saying anything, but they will revolve around cash. So now I'll open it up for questions. Types of things that we get. Does Qvinci support industries other than franchising and accounting? Yes, we do. We've got customers who are using our solution with great success, who are nonprofits like dioceses, multi-unit small and medium businesses, banking and investment, even associations. So we really are, from the standpoint of a reporting solution, because of the way we present the data to you, where it's easy to digest, easy to understand, and easy to interpret. We are agnostic in the types of businesses that can benefit from our solution, and that really fits our entire profile in being something that is simple for a customer to use, simple for them to actually onboard, easy for them to digest the information and get real actionable business intelligence from that information. Now, while we're thinking of any questions that you have, what we will do is we will launch our last poll, and it'll be the last survey that we have. And feel free to fire away either on chat or otherwise, and ask any questions that you have. Well, with the questions going to chat, my colleagues answering those, I wanted to take a moment, say thank you for attending this webinar. Again, you can reach us at those emails. This deck will be available to you, and will be available on our website as well. But thank you for attending Qvinci 101. There are definitely additional webinars to follow that will build on this overview and really drill down into the new features that we have, and we'll show you the features that we carry that maybe if you're a Qvinci customer aren't even using. Thank you everyone for attending again, and I hope everyone has a great day. Take care.